Etienne, happy to catch up, man. Good excuse to meet. I know we've known each other for, I don't want to say how many years, but it's been a long time. I'll ask a question to kick things off. You just closed the fund. Why the hell did you want to start a fund?
Good question. I think life arcs or career arcs, or some of it is a little bit of magic and a little bit of organic serendipity. And I would say the VC path for me was not necessarily something I expected necessarily in my life at this stage. But I built a company from scratch, experienced the bootstrapping game, then raising a little bit of money, then the exit, and it was a whole founder whirlwind. And then once I exited, people were like, "What's next?" People expect you to build right away something, and I wasn't quite ready. It was like a transition phase anyway. At first, you got to go work for the acquiring company first, and then you take a little bit of time off. True story, I actually took just 2 weeks off. My wife wanted me to take maybe a year, but anyway. And then I just started tinkering a little bit, not really knowing. I started to work with my buddies at WorkLeap, help them with their innovation labs and more as a consulting gig, which helped me see something else, and also a well-oiled machine, scale up or unicorn from the inside. And then the what's next itch started to, maybe that's 3 years in, but started to really come back. So I was very open-minded at that time, and you'll find me esoteric, but the universe sent me a couple of opportunities, very different. So it was good benchmarking, and one of them was Luis, the founder of Telegraph Hill Capital out of Barcelona. He was in town. They've done a dozen investments in Montreal. And little did I know, we were introduced via an entrepreneur friend or mutual contact and connection. And we met, we just vibed. He identified a gap locally at the pre-seed stage, and I identified it as a founder. And he was like, you heard my story, but now he's like, you'd be an amazing VC. I'm like, really? I didn't see myself I was doing a little bit of an angel investing, but I didn't see myself as a VC. And then we just vibed on the values, the vision, especially the gap in the market. And it felt like I'm a 0 to 1 guy. Like, I love building. I love when it's scrappy and messy and uncertain, and you got to fight for your life. And it felt angel investing. I made a little bit of money, but I didn't have enough money to cut meaningful checks. So it felt like going to the VC side and raise actually a sizable round fund. I could have the platform and impact to move the needle locally. And that's really at the end what seduced me and made me jump the fence, quote unquote.
I see you obviously as a founder, right? Like you founded this new fund and obviously co-founded the Heyday. How was it when you sold and then now you're part of a bigger company, Hootsuite? How did that transition happen? Maybe on the personal side of it, right? I imagine it was not easy, or maybe it was, right? So I'm like, we haven't spoken about that part. And then maybe question 1B is how you think about that now as like your new DNA as a co-founder of Telegraph.
Yeah, it's a two-pronged question, and there's a few details there. But I would say the first part, how do you feel after the exit? It's a weird thing, right? There's a lot of glamorization of exits and whatnot, and of course it's a great event, and it's a life-changing event in life, and it changed my life for the better. But in the moment, it became bittersweet because at first we were all exhilarated, right? It was 2021, the height of 2021. Everybody and their grandmother was going IPO. There were SPACs, there were weird stuff happening. And we got acquired by Hootsuite out of Vancouver. Hootsuite is, as you probably know, leader in social media management, like a platform for brands to manage their socials. And Canadian unicorn, big revenue. So IPO primed at the time. But the growth was a little flat-ish. It was single digit more than double digit or close to double digit. So they needed a shiny object. That's what I realized after the fact. But they needed a bit of a shiny object to go IPO. And that was Heyday. They acquired us for the AI story and also together the strategy that I put together for both companies that in the end never really materialized, but was okay, social commerce is the next frontier. How do you scale that? You need AI automation to manage every customer touch point, right? So the synergies between the two companies were very promising. And then the goal was okay, we get acquired, we go IPO, we raise $200 million and we execute on the vision. So people were very excited. We arrived there like rock stars, red carpet, I was speaking at town halls in front of the whole company about the 5-year strategy, and whatnot. And then boom, the IPO window closed. Right? Coveo got the last spot on the TSX, and Hootsuite failed to execute its IPO. So then instead of managing growth and building the future vision, we just started to just fire half of the company, slowly but surely. So it was a bipolar year because you start to get acquired, you get super excited, and then you get depressed. And oddly enough, you got a bit of a financial windfall, but that was the most miserable year of my life. It was a big post-acquisition blues, and you feel a little lonely. Of course, the founder grind is always a lonely journey, but especially so because you feel like you should be happy you made money, but money's not everything, right? Founders are purpose-driven more than money-driven, although if you do well, you're going to have money as an outcome, which is great. So that was a weird phase of my life where, and there's still battle scars of that, but it also comes with the territory. Once you sell your company, you also lose control a little bit over the destiny of what's coming next. So that was the first question. I already forgot the second one. The second one was, how do you feel in your new identity as a VC? Was that it?
Exactly. Yeah, maybe more double click on it because it's also maybe a personal reflection as we're wearing the same hat, started companies and now starting funds. And I've had to come to grips with, oh shit, I'm looking at the term sheet. It's a 10-year journey and this is not a overnight thing. So it's definitely a long-term project. So coming to grips with a personal identity, okay, this is the thing that I believe in, and having the choice, and we can maybe share like a little bit. I know we've done this offline of like just sharing, crying over like the pain of raising a fund in the worst possible time. But it also definitely, at least for me, definitely questioned me, do I really want to do this? There's so many other things I could do in my life. So that's why I'm reflecting and looking in the mirror, reflecting the question to you of, how did you come to grips with, okay, this new job, is this something you really want to do? And tying it to your identity.
Yeah, no, it's a good question. Again, I think it's like the founder grit comes both from being resilient and also a little bit naive, right? Being an idealist. So of course, sometimes like you build your resilience through like the hurdles, but if you knew all the hurdles beforehand, would you do it? Right? And it's always a question. But once you're in it, there's a bit of that sunk cost fallacy and also resilience, and you keep your eyes on the prize. And if you battle through, and in the end, the goal is to cross the finish line, which I think I just closed, you're about to close, so good for you. And now that in hindsight, after doing it with my startup and now doing it with the fund, I would call it kind of like business Darwinism, or there's a natural selection where that like hardship, and that in French I would say traverser du désert, right? That crossing the chasm, or I don't know how to really translate it fully, but it's like a necessary step to filter out the would-be's and the people who are there for the hype and the people who actually want to build for the long term. And you mentioned it's a 10-year commitment. Of course, big institutional LPs are not gonna trust you if you're just there for a couple months, right? They want to see that grit in a way. I think it's more of a feature than a bug a little bit. But it's a different timeline. Like I was used as a founder to raise like a sprint. I was a sprinter, not a marathoner. So you raise, you go on, and you have more optionality as a founder too. If it doesn't work in Quebec, you could go in other markets. Here locally, as you need to work with the timeline that you're given, and you got to keep your eyes on the prize. And the commitment, I think, is actually good because it creates alignment with the portfolio companies. If there was no commitment, then, I'm selling, as a founder, I'm selling equity to you in my company, and maybe you're gone in 2 years. Like, I'm looking for a partner more than money, right? So I do think it aligns incentives, but you definitely need to be intentional because it's not a light decision to take. There's money, there's skin in the game in multiple forms: money, time, sweat, tears. So it's not for the faint of heart. Let's put it that way.
Now that you guys have closed, and congratulations. And actually, maybe before I ask the question of what are you most excited about, maybe give us the quick pitch on what is Telegraph.
Yeah, so as I mentioned a little earlier, we identified a gap at the earliest stages. So earliest stages, it's earlier than earlier. Sometimes it's zero revenue. I would say it's between 0 and 1 million ARR, but the sweet spot would be probably a bit earlier than 500K ARR. So first money in type of check. And the way I see it, and my partners see it as well the same way, is like it's capital, but with a little plus. So I think to stand out in the VC game, you need to walk the talk, not just say we're capital and we'll help you, but actually mean it. And that's my personal interest in that venture is actually that. It's almost being a co-founder with capital. And on demand, of course, the goal is not to be like in the founder's short and let them cook. But I have a little bit of operational expertise and battle scars that gave me hopefully a little bit of wisdom and some playbooks and some ways to, I don't have all the answers, but I can like try to put bubble wrap around the founder a little bit to avoid some pitfalls and some easy like bear traps to avoid that every first time founder falls for. So this is like the mindset of let's come in very early, maybe too risky for most, but for us, we're going to de-risk with a little bit of sweat beyond the capital, a little bit of know-how in the trenches. And that's like the philosophy, but more in terms of thesis, in terms of space. We're multi-sectorial in the B2B SaaS. Of course, it's 2025, so we're looking for AI-driven startups that are really core business, right? There's a lot of AI hype and new applications that are being built every second. And with tools like Lovable, like you can prototype your way to a semi-product in like a couple hours. We're looking for core business applications that are by design stickier, unlock more ROI, and maybe the technology is not the moat at the very beginning because now it's easy to knock off pretty much any software. But because you have a clear core business application and use case and ROI, because maybe you're focused in a vertical, then you land and expand in that vertical, and then you have more proprietary data in that vertical, and then the AI flywheel starts to turn, right? So technology in the end becomes the moat. Maybe go-to-market is the first moat, but then these two moats together, GTM and product or IP, they compound and they build on each other. So we're looking for, it sounds a little broad, but again, we want to be a generalist VC solution for these types of B2B founders, B2B SaaS founders in Quebec.
Yes, yeah, it's super interesting. So it's Quebec only,
Quebec
pre-seed.
only, sorry, yeah.
Average check size at entry?
Average would be 500,000 Canadian, but I would say we like to lead rounds. Again, echoing back to the philosophy of getting involved. We lead rounds mostly, take a board seat, help the founder, execute, get the product market fit as fast as possible. And then we keep, so we can go up to 750K Canadian when we lead rounds. And then we keep follow-on reserves of about $1 million to double click on winners.
I like this concept also, like you mentioned, like almost like a financial co-founder. It was a term I like to use too, where it's like you guys are really first partners to the startups. And I find that maybe to go back to the question I wanted to ask before, it's like what you like the most, but I'm going to put an answer for you, but I feel like you're a founder's founder, right? Like in the sense of you really want to help roll up your sleeves and help the founding team as much as possible.
Oh yeah. Look, the reason why I'm doing VC is my joke is I'm like an alcoholic at the bar, but I'm drinking my 7-Up. Like but I'm still in the party. So no, it's a good excuse to still be in the trenches. Of course, differently, right? When you operate one business and it's your baby and you just grind day and night on that business. I can't do that on over 30 portfolio companies. But at least I know what it takes. I know what it's like. I know the pains, the growing pains. And if I can be beyond capital, a good counsel and cheerleader, I've done my job, I think, as a portfolio manager.
I'm going to share a story. I don't know if you're going to remember this, but like how you helped me with my previous company. And it was even before we launched, like I was still very much in the ideation phase of P&R, right? So people that know, it's like I started the management consulting firm. And remember, we were at some event, one of these meetups. It was like a meetup, basically.
Oh, yeah. I forgot about that. And it was a responsive org meetup that I co-organized.
Yes,
And
exactly.
you were there.
And I was there. It was like, because I was thinking a lot back then, there was this movement of this new crop of kind of like service firms. And I remember pitching, it was like one of the firms I look up to is this firm that doesn't exist anymore. It's called Undercurrent.
Yeah.
And
we're both geeks, Undercurrent geeks.
That's it.
Fanboys.
And I remember you just giving me like the fact that you knew, like you were in this space thinking about it, and also just giving me good advice and kind of made me want to say, fuck, I think I have something here. And
nice.
It
I didn't know that.
Yeah, it definitely helped me back then validate, okay, there's interest here, right? Just seeing your excitement, and then like obviously launched the company and everything else, but which is not the goal of this podcast. But yeah, I remember it was extremely helpful back then.
Oh, nice. I didn't know that. But yeah, I tend to, founders are like, oh, this guy is weird, but in a good way. I turn VC pitches and brainstorms, right? I try to be very generous and candid with my advice and also brainstorm with founders as if I'm already working in their companies. First of all, it's a good sanity check to see if they're coachable but also I need to believe in the business. I need to feel like I could be working for that founder or for that business to make it succeed post-investment. Part of the thesis that's hidden, but that's very real, is like we need to see GP fit. So fund and almost like a fund market fit, or I don't know how to say that, fund startup fit, where we feel like we have added value. And I it's a dark side and also probably my biggest quality, but not dark side, but blind spot. I get excited easily, but then it's about maintaining that excitement of, okay, we translate the excitement into actionable results, and that's what I look into founders.
Yeah, maybe I'll share, like this is, I feel like a good therapy session. I'll share things that I find that are difficult for me. I'm curious to hear you, like, of the new job. Like you mentioned, I think we both love working with founders, brainstorming ideas, and think of the positive side of optimism. I think you have to be optimistic by nature, right? In this job, it's what can be.
Especially early stage.
Exactly. And I find the two things I struggle with is, one is a lot of it at this point is like, it's much more on the quality of the person.
Yeah.
and the
Oh, yeah.
founder and that team. And sometimes it's not easy to say. I don't think it hits the bar for the type of people we want to work with. And also just having to say no a bunch for a bunch of different reasons. So I'm like, oh shit, I'm optimistic, but at the same time, we can't invest in every single company.
Got to be choosy, right?
Yeah. So like, how have you been dealing with the challenge?
Yeah, it's early. I think the best way to manage it is to always. I hate it as a founder to get misled. A no is not as bad as a maybe sometimes. Founders need clarity because they need to execute, right? They don't. So I try to make sure that founders never waste their time with me. But a no can become a yes. It's also like I don't close doors unless like it's clear that it's off thesis and it just won't work. But sometimes like you just need a little bit more conviction and it's okay. And I think you got to be candid with founders and tell them, look, you heard the highlights. That's actually my format when I give feedback. Highlights, lower lights, and what's missing, right? To build a conviction. Sometimes it's just we want to see them execute a little bit more. But we come in at the earliest stages, so of course it won't be a perfect picture, right? So you're right. You're taking a bet on a team that will... I think it's a combination, and it's not rocket science. It's a combination of why this founder, why now in that space, right? And if the founding team is like gritty and smart and they have good founder market fit and the space is massive and there is an inflection point right now happening, chances are you'll, in the B2B space, that's why I love the B2B space, is that you'll find, maybe you won't be a unicorn, but you'll find your way. You'll find some kind of segment that you can own and build a good business out of it. B2C is less forgiving. It's like winner take all, do or die, which I don't like as much. That's why it's off thesis. But yeah, and that's what it's all about. But nobody has a crystal ball. As of course, we're building diversified funds because a lot can happen. Founder infighting, shifts in the, like, for example, OpenAI, like ChatGPT, when it resetted like the roadmap for pretty much every company out there. But the only constant will be how the founding team will react to that change. And instead of getting crushed by it, they will leverage it to build an even better company.
How have you thought about building your own firm, your fund, right? Because it's like you said, going back to founder, like build mode, but this time you're selling a partnership where it comes with capital. How have you approached that thought process? Like you mentioned, I think some parts of it that are interesting, right? Like this notion of partnering very early, but maybe the double click about the building part of what you're trying to do.
Look, I think I'm still new to this game, so I don't have all the answers, and I'll figure them out as I go, as a good founder would. I think the building, to get to that point, it was still like an 18-month journey, like from the first, let's say, even a little bit more, from the first pitch to the closing. One thing I do know, because it was similar with my co-founders at Heyday. We were very different, highly complementary, right? So I always look for partners where my strengths are like will complement theirs, and therefore we can all shine in our own way. And we don't overstep, we don't step on each other's toes, and the combination, the classic kind of sum of its parts is going to create value. So that was that plus alignment around vision, values, and of course the timing in your life, because it has a lot to play with a successful outcome, both on the founding side or on the VC side. But I think building a fund is similar to building a startup, especially when you're an emerging manager, you're the underdog, like nobody... Not that people don't believe in you, but like you have to prove that you're someone that we can believe in, right? So it's baby steps, and the goal is velocity. It's the same as a founder. Like it's always baby steps that compound. Then your role is to try to control as much as possible the cadence, like the velocity, so that they compound faster, and that you go from 0 to 1 faster. So 0 to 1 in a startup would be like from a prototype, let's say, an idea to product market fit. In a fund, it would be from a pitch deck to institutional investors to actually investing, doing good investments in startups that ladder up to your thesis and that you're actually delivering on what you sold them. And that's the beauty. Like, I think you got to also have a strong start and start with, we talked about velocity. As soon as we closed, we already had an investment signed and ready. Of course, we had a little bit of backlog because of the 18 months, but you got to build, I think, with speed, but always staying true to the core values of what you sold. But also, in the end, it's not just what you sold to the LPs, but it's what you sold to yourself as a team. If we digress from that, we're not playing the role that we're meant to play.
Yeah. We spoke about the fun things of the job, which I find is learning, meeting some bright people, and trying to see how we can work together. And I know offline we've shared a lot of the pains of raising a fund. And you brought up something interesting, is the filter of that's used. Hey, like not everyone can raise a fund. Curious to hear a little bit about the lessons learned, fundraising in particular. That was like the worst time to raise a fund, basically.
Yeah, it was the worst time to raise a fund based on the macros and whatnot. But it's also probably the most exciting time to raise a fund too, right? If you look on the bright side, because there's a bit of reset in the ecosystem. I think the ecosystem needs a mix of legacy managers who know their shit and who've built platforms, and there's a few iconic names here locally, like Inovia, for example. But you also need fresh blood, and of course I'll preach for my choir, but I think you need operators. You need folks who have the operational expertise and empathy to connect with founders and to evaluate, especially at the early stages when you're looking at intangibles that get very tangible down the road, but are still a bit intangible at that stage. I think being a founder yourself helps kind of have the right hunches or instincts, or you won't be right each time, but you have like the pattern recognition. Let's say that an experienced VC would get through experience. You have a little bit of that cheat code out of the gate. Then you need to learn the more like the operating, the fun part, the fun admin and whatnot. And that's the beauty with my partnership with my partner, Luis and Varun, who have been in the game for almost 20 years. I think that the main difference between fundraising for a fund and the startup I mentioned earlier, it's changing a little bit your horizon and expectations, where I used to approach everything very impatient with impatience, the impatience of the founder, running it like a sprint. This journey is more like a marathon. So it's you need to think in decades, not in days, essentially.
Yeah. One other element I've learned is that there's more. I find when you explain the fundraise process to founders, oh shit, like you have to go through the same thing as well.
And it's more complex and it's more political, but it's good because I love what we just live, Nectar. I'm sure you experience it on the daily. It creates. I don't think I needed like all the battle scars to feel that, but it's just good that it revives like the understanding of what they have to go through, especially when they're underdogs, when they're just getting started, they're first time founders and nobody's like looking at them. It's like it's a volumes game. You need to stay in action, and I think those battle scars are very useful to be empathetic of their journey.
Yeah, and I find it honestly in some regards it's even harder. Give an example. It's like in my previous company, if an investor, a partner, client says no, you lift the middle finger and you keep building. You keep building. Here it's if a big LP says no, I'm selling 3 people to a PowerPoint, right? It's if a big LP says no, I can't do the job. So my mental model switched very much to okay, this has to be, if I want to do the job and I want to do well, I have to get good at this skill.
Yeah.
And honestly, it's like you have to build trust with the LPs. That's what it is. And you because they're entrusting you with their money. So it's very necessary part of the job.
But it's true with founders too, right? I just think again the time horizon is a bit different, right? But it's the same. Like when you're gonna invest, you're gonna see a founder maybe, I don't know, but let's say you'll have a dozen touch points. Maybe not all like face to face, but you'll have touch points, meaning interactions online, in person, everything in between, right? And that's just to get to the part where you're building conviction. I'm not talking about due diligence and whatnot. And every touch point is either trust building or it could be neutral, like not in just it's status quo, but ideally it's trust building. And it's the same with LPs. They're human beings, right? At the end of the day, forget about the money. It's human beings buying into other human beings. So it's just trust. It's just trust based. Not that the numbers don't matter, they do, and the thesis it does matter too. But do I trust Nectar to execute on what you just pitched me? And do I trust that this guy is in it for the real reasons and is committed for long term? These are the fundamental questions.
Yeah, 100%. And maybe to talk a little bit about your partners, because I've had the benefit of knowing Luis in particular for 12, 13 years now. We had invested, back when I was at Google, and we invested in a company called Chronogolf.
You were in it? I didn't know you were.
We were on the board together.
Okay.
That's how I met Luis. It was like, it was a board meeting. It was like, oh, there's this guy from Barcelona. I think I'm going to sing their praise a bit because I don't think too many people know, and you glossed over it, but it's Telegraph has done, I don't know how many investments in Quebec, but it's just...
A dozen, actually. Over the... Chronogolf was back in 2014, but and then they had an exit to Lightspeed in 2019. I don't know... First investment, first exit in Canada, so they started to double click on the market. But since 2018, they've been more active, and it's a dozen investments. 2 guys out of Barcelona, it's impressive.
You asked me how many other funds from other cities have done 12 like early stage deals in Montreal. Like, I don't think there's that many, right? So I have to give huge credit to Luis and Varun for that, and really sharp guys. And so, yeah, maybe it's just the benefit of the luck of co-invested together in Chronogolf and seeing them in action. And there's so many more that you mentioned, the other dozen, some really good ones, like Plant comes to mind. And so, yeah, and I've seen Luis operate where I think Plant, going back to the Plant example, it's hey, like there was dark times and it was easy, and being there to support during critical junctions, I think that's what you need from your investor.
Totally. And I think when you said you're a founder's founder, like for me, this would never work, this partnership, if we were not aligned on that. Like we're founder first. Of course, like we have LPs and we're here to make money. At some point, you need to have some hard conversations sometimes with founders. But if you do it with respect and also strategic alignment, and I think every conversation can be had. But that's what I love. I didn't know Luis, right? So I skipped that part for the benefit of brevity, although it's not my number one skill. I'm a detailed guy. But when I met with Luis, we really vibed out of the gate. I think business bromance out of the gate, just connected on the values and the gap we identified. But then I didn't know the guy, right? So we kind of agreed to do for, I think it was for a quarter, like 3 months. Let's do a reverse due diligence on each other. And as part of, on my side, a big chunk of it was interviewing all the founders in the local portfolio, right? And Plan was one of these companies. And to your point, Plan during COVID, like they hit rock bottom. They were in the event and kind of travel space, right? So that went to zero. And many VCs would have been, and rightfully so at some point, that's part of the VC game. You have a portfolio, you're diversified. But the natural instinct for a VC would be like to write off a company like this because you don't know how long COVID will last. And these guys doubled down. Varun and Luis, they went into the trenches with the founders, helped crunch some spreadsheets, extend the runway. And now the company, I think it's last year, raised 35 million USD, Series B. And they're on their way. They had iconic customers, Amazon, SpaceX, Instacart, and everything in between, L'Oreal, I believe. That grit, I think when we're looking for grit in founders, for me, we need to walk the talk. We need to be gritty as investors too. And that proved me that, number one, they're founder first, but also they're gritty investors. And I often say I'm looking for cockroaches. I want founders who can survive anything. Like, you need VCs who can survive anything to be the real partners in the trenches for you.
Yeah, said. I've been saying the joke of, we should rebrand their Cockroach Capital.
Yeah.
But yeah, that's stealing a little bit of this. There's this guy in Toronto named Fat. His fund is called Roach Capital, which is the same concept. So to guess copyright on that. Yeah, dude, I could bug you for hours, and I know I always do. Maybe a final question or two. What's next now? You've closed. You're starting to deploy. How are you going to build deal flow? Like, what's your strategy?
Yeah, so far, like it hasn't been a problem as there's a lot of supply, not all quality, but since we launched, I think we launched, for context now, we're October 21st today, 22nd. So we announced the fund September 25. So that's like a month. We've looked at 120 companies so far. Like, we had a lot of inbound. That said, of course, it's not all quality. Right now, I would say the deal flow comes, we talked about trust earlier, right? So it's a trust business. So, of course, the good news of being a founder, I was already a bit connected with the ecosystem. There's also my generation of founders. Some of them exited. Now they're starting new companies. So, of course, there's going to be some repeat founders coming out of my personal network or referrals, trust base. And then we also want to be the money for first-time founders, the underdogs, the Davids against Goliath? How do you say it in English? So we're going to have a good mix of first-time and repeat founders. The first-time founders, I think it's through accelerators. And again, it's also through co-investors. So and mentors like angel investors. Some of our LPs are successful entrepreneurs who, of course, get pitched on the daily. So I think you need to build like small coalitions with diverse viewpoints on the ecosystem. So co-investors, angels, accelerators, of course, founders. And through it all, maintain a good brand, personal brand, right? So being an honest broker, being candid without being too, there's radical candor, but sometimes that's just cover for being a jerk. But I'd say candid without the radical side. Just being a founder first and a cheerleader and an honest sounding board. That has been my approach so far, being generous with feedback and selfless, that we might not invest, might not be for me, but I'll spend the time and I'll give you what I think. And hopefully there's one thing that can help you in this. And hopefully these baby steps, these micro interactions will build up and create a positive flywheel in terms of deal flow for us. At least I'm pretty committed to do that and convinced that it will be a net positive in our deal flow.
You mentioned the supply-demand imbalance, and I've seen this up front. It's like there's way too many good people versus the quantity of capital available.
Oh, yeah.
So I applaud you guys coming to market, especially like you mentioned, gap of like really being there at the early stage, which I'm afraid to go. Like, we're not there. We're seed-focused. Really excited that you guys are closed. Maybe final question then, Etienne, for you is, if people want to reach out, connect, what's the best way?
The best way is, number one, don't be shy. Don't wait to have it all figured out. You're an early stage company. Of course, you have flaws, and we're here to look at the positive stuff and help you build on the potential and pair you with either capital and or mentors to accelerate you. But to reach out, I would say, of course, LinkedIn. I'm pretty active on LinkedIn, so LinkedIn's a good channel. Otherwise, you can visit our website, Telegraph without an E, so Telegraph in English, -vc.com. You see the bootstrap founder here. The dot VC was too expensive for an emerging manager. I founded creative.com. Telegraph-vc.com.
Awesome. Etienne, merci
Was
beaucoup.
it dash or hyphen? I don't know. You got it.
Awesome, man. Thank you so much.
Thank you so much, Nectar.